Today, we're going to dive into the absolutely incredible story of how Sir Isaac Newton, that Newton, the guy who basically invented modern physics, lost a fortune in the stock market.
I mean, it's the ultimate paradox, right? Think about it. We're talking about a guy whose brain was so massive it changed how we see the entire universe, and he couldn't beat the market? So what chance do the rest of us have? That's the big, fascinating question we're going to try and answer.
And here it is. This is the quote he supposedly said after everything went south. It just says it all, doesn't it? It perfectly sets up the theme for our whole story. This epic clash between pure, cold logic and the total, unpredictable madness of a crowd.
Okay, so how on earth did this all go down? Well, first things first, we got to look at what Newton was even investing in. And believe it or not, it was basically the 18th century version of a meme stock. The company was called the South Sea Company. And look, on paper, it sounded brilliant. The British government was drowning in debt. So they came up with this clever plan. They created this company, and the deal was pretty simple. The South Sea Company takes on the government's debt, and in exchange, it gets this amazing monopoly on all trade with the super-rich lands of South America. Sounds like a can't-miss deal, right? But here's where it gets crazy. The gap between the sales pitch and the reality was just massive. The promise was this exclusive golden ticket to riches. The reality? Well, there was a tiny problem. South America was controlled by Spain. And, spoiler alert, the Spanish weren't just going to let British ships roll in and start trading. So, those amazing trade profits? Yeah, they were pretty much zero. The company's real asset wasn't gold or silver, it was just a really, really good story.
Okay, so we have this company that's basically running on pure hype. Let's follow the timeline of how our genius investor got pulled in. This is where you see a brilliant, logical mind get completely hijacked by raw emotion.
So check this out. This timeline tells the whole tragic story. Early 1720, Newton gets in. Smart move. By April, the stock is flying high, and he does the perfectly rational thing. He sells. Cashes out with a 7,000-pound profit, basically doubling his money. Genius, right? But then the trap is set. He has to sit there and watch his friends who stayed in get ridiculously rich. The stock price just keeps screaming higher, 500, 700, all the way past 800 pounds. And that fear of missing out, that FOMO, it just eats him alive. He jumps back in right at the top. And he doesn't just put his profits back in, he goes in big with his own money. And then, well, you know what happened next. The whole thing came crashing down.
The total loss? A staggering £20,000. Now, you have to understand, that number is almost meaningless to us today. Back then, it was an astronomical fortune. We're talking millions and millions in today's money. It completely wiped him out. His entire life savings, everything he'd earned over decades as the master of the Royal Mint, gone, just like that.
So what was it? What was this invisible force that could completely overpower a mind like Isaac Newton's? Well, it's a concept that explains almost every single speculative bubble in all of history. It's called the greater fool game. The whole theory is actually super simple and kind of cynical. It basically says that the price of something, could be a stock, a house, a tulip bulb, whatever, stops having anything to do with what it's actually worth. People buy it for one reason, and one reason only, because they think they can sell it to someone else, a greater fool, for an even higher price tomorrow. So here's the playbook, step by step. First, the price completely disconnects from reality. Then everyone rushes in. Nobody cares about the fundamentals anymore, they're just focused on flipping it to the next guy. But here's the thing, eventually you just run out of new fools willing to pay these insane prices. And when that happens, it's like a game of musical chairs. The music stops, and the price doesn't just drift down, it completely collapses, instantly. And whoever is left holding the asset when the music stops, they lose everything. And this is the key takeaway, right? This is why Newton's genius didn't help him. He could use calculus to map out the planets because planets follow logical, predictable rules. But when you're in a market where rationality goes to zero, well, you can't divide by zero. All your models, all your math, it becomes totally useless against a tidal wave of pure human madness. Now, it's easy to look at this and think, okay, that was 300 years ago. But don't be fooled. This isn't just some dusty old history lesson. This exact same pattern has repeated itself over and over and over again. You look back through history, you've got tulip mania in the 1600s, the South Sea bubble we just talked about, fast forward to the dot-com bubble in the late 90s,
or even some of the wild stuff we've seen in recent years. Look, the names change, the assets change, the technology changes, but the human psychology driving it all, the greed, the fear of missing out, that core belief that there's always a greater fool, that part never, ever changes.
And that really brings us to the most important lesson from Newton's whole disaster. The biggest threat to your money isn't some complicated market crash or a risky stock. No, the biggest enemy in investing is you. It's us. It's our own emotions, our own greed, our own fear, our own tendency to just follow the crowd right off a cliff. So I'll just leave you with this one final thought. We just walked through how one of the smartest people who ever lived got completely consumed by a psychological trap. So knowing all this, knowing exactly how these bubbles work, the real question you have to ask yourself is, when the next one inevitably comes along, and it will you be able to resist the pull?